Hi, good afternoon, everyone, or good evening, wherever you are, and happy Friday. So, welcome to Perima's Dynamic Huddles. This is the first Dynamic Huddle that has happened on a Friday, but we are really glad that all of you have made some time today to join us today to understand something a little bit more interesting and something that's getting a little bit more popular in the recent times. But before we begin, I'd like to start us off on a little quick ice-breaking exercise. And allow me to introduce myself. My name is Samantha Teo. I am the Executive Director of Perima. It's really nice to have all of you with us today. So after I've introduced myself, I hope everyone could also introduce themselves in a very simple and fun way that we normally do at our dynamic huddles. So feel free to let us know by breaking the ice if you could either rename yourselves by clicking your name on the profile and click rename and just let us know which company you're from or which country you're currently residing in, because in the next up, if you do ask a question, we do understand the demographics of where you're coming from and gives us a better insight, as to why you're asking that question. Furthermore, in this day and age with Zoom, we are able to participate without actually speaking. But if you'd like to unmute yourself and speak, feel free to raise your hand first, and then we'll direct, our moderator will be able to see that you like to speak. Otherwise, feel free to type in your questions in the chat box for our moderator to pick up the questions to ask our very esteemed and knowledgeable panel that we have today. During the process, if you do like something that you hear, support our speakers by either giving them a thumbs up or a round of applause for a reaction. So thank you all. I can see some of our very attendees who have been joining us for quite some time. Thank you all, because I can tell that you have all been showing some information of yourselves. So I can see Yan. So hi, Yan from Thailand. Yan is also our Perima board member. Great to have you with us. And some are very familiar names. So today's session is all about parametric insurance or solutions. It is quite a very popular tool that our risk managers, our members, our risk community has been looking into. But particularly today, we will be exploring what's going to happen in specific to the country in India. So this session has been one of the idea came out from one of Perima's latest chapter heads, Mrunal. She had a idea on wanting to explore this option for our risk managers locally in India and thought of having this session set up. So I'm not the expert here, but we have a room full of experts sitting on a panel, so I'll not take up too much time. With that, I'd like to introduce to you who we have on the panel. And today we have Tanvi Mehta. She is the Senior Structural Innovative Risk Solutions from APAC, from Swiss Re Corporate Solutions. We have Mr. Ajit Hora, Director and Member of the Board of Prudent Insurance Brokers, Mr. Murthy DVR from Director Finance of Nordex India, and of course, last but not least, Mrunal Pandit. She is the Insurance Lead of Tata Consumer Products and also Perima India's Chapter Lead of Bengaluru. So without further ado, I'm just going to pass it to Mr. Ajit, who will be taking us through some information on parametric solutions, and he will take us away. Thank you very much.
Thank you, Samantha, and a very good afternoon and good evening to everyone. When we talk about narrowing the gap, we are basically talking about narrowing the protection gap of insurance. So let us try and briefly understand what this protection gap is and how it is relevant in the global perspective as well as with respect to India. In very simple terms, protection gap is the gap between the total economic losses and the insured losses due to natural catastrophic. So, in very simple terms, protection gap is the gap between the total economic losses and the insured losses due to natural catastrophic events. So, in any event, you have losses which are insured and indemnified by the insurers, and then you have losses which are not insured at all and are borne by the people who suffer these losses. These both put together are the total economic losses. And the gap between these total economic losses and the insured losses is what we refer to as the protection gap. Also, when we talk of insured losses, we mostly talk of the losses which are paid under traditional insurance programs, taking into account the exclusions, the deductibles, and all those conditions which are imposed under the traditional insurance programs. We will dwell a little more on these traditional insurance programs a bit later. Globally, the frequency and severity of the natural catastrophic events has been increasing for the last few years. In the year 2023 alone, there were more than 400 natural catastrophic events which caused a total economic loss to the tune of $380 billion. You will be surprised to know that out of this, only 118 million were insured losses, leaving a protection gap of $262 million, which is a whopping 70%. What is more worrying is the fact that the global economic losses have been surpassing the $300 billion mark for the 8th year in a row. And in 2023, they were 22% more than the long-term average. And do we have any reason to believe that these losses are going to go down in the future? The answer, in all probability, is an emphatic no. Now, if you look at the map, which shows the peril and event patterns of the losses which contributed to the overall economic losses, you will find that earthquake is the largest contributor. And here also, handful of losses on the earthquake sequence in Turkey and Syria. Now, if we come to the Indian scenario, India is highly vulnerable to natural disasters. Out of the 36 states and union territories, 27 of them are disaster prone. India as a country is highly exposed to natural disasters due to its geographical location, due to the seismic risk zones, and the intertropical convergence point. India faces recurring atmospheric phenomena in terms of heavy monsoon rains, cyclones, storms, floods, and episodes of high heat and drought. During the years between 2020 to 2022, India had 40 notable natural catastrophic events, resulting in total economic losses to the tune of $33 billion. You may be shocked to know that out of this, only $1 billion were insured losses, leaving a protection gap of $32 billion, which is more than 95%. The map clearly shows the events of heavy rains, floods, and landslides in the months of June and September, and they show lightning and storm in the months of January and February. The alarming increase in the natural catastrophic losses globally as well as in India has put a lot of pressure on the insurers and reinsurers across the world. And this clearly reflects in the pricing and the available capacities. If we were to look at a few numbers in the Indian insurance market, the premium rates for the STFI group of perils have increased by more than 90% during the years 2018 to 2023. On the screen, you will see for the non-industrial risks, the premium rate for STFI used to be 0.1125 per mil in 2018, which increased to 0.22 per mil, an increase of 96%. During the same period, the rate for the industrial risks increased from 0.1875 per mil to 0.37 per mil, which is an increase of 97%. The storage rates for closed warehouses was the worst case, wherein the premium rate increased from 0.1875 per mil to 0.52 per mil, an increase of 193%. The storages in open, the premium rates were equally bad, an increase of 100% from 1.125 per mil to 2.25 per mil. Even the construction risks, they saw a drastic increase of 78%, wherein the rates increased from 0.225 per mil to 0.4 per mil. Now, when we talk of protection gap, something else comes to our mind, which is the non-damage business interruption, NDBI. Now, typically, traditional PDBI insurance programs provide cover for business interruption only as a result of property damage. while it was COVID 2020, which brought the risk of pandemic and the risk of non-damage business interruption to the forefront. There are quite a few natural catastrophic events which do not lead to property damage, but they cause huge business interruption losses which are not covered by the traditional property damage business interruption programs. Also, with respect to contingent business interruption, there are serious constraints about limits, and quite a few clients find these limits abysmally low. Now, while the data clearly points towards a huge protection gap, it is extremely important for all of us to understand the reasons for this gap. The absolute quantum of this gap in terms of billions of dollars makes this question a bit more serious. Now, is the gap due to lack of awareness? With the natural catastrophic events increasing in frequency and severity year on year, this probably cannot be a major cause. Is it due to high cost of insurance of risk transfer? Is it due to restricted capacity available in the traditional insurance and reinsurance market? Or is it due to the fact that traditional insurers ask too many questions, they ask for a lot of information and documents, and the claims settlement procedure is far too lengthy and cumbersome? It is quite possible that all these reasons would be contributing towards the huge protection gap. Now, when we talked about the protection gap, we said that this was primarily a gap between the total economic losses and traditionally insured losses. I'm sure all of our participants understand how commercial property insurance works, but just to touch upon a few major points. Now, typically, traditional property insurance covers the entire replacement value of the property with or without sublimits. It promises to cover and indemnify for the actual losses sustained during an event or due to a peril. Payment is normally made after an actual assessment or investigation, taking into account the deductibles, the exclusions, and all those conditions which are imposed under the traditional insurance programs. The objective is to put back the client or the insured in the same position as he was prior to the event, typically the basic principle of indemnity. Now, the widening Nat Cat protection gap has prompted insurance brokers and clients to look for innovative alternate risk transfer solutions. One such solution is parametric insurance, which is used to fill in the gaps left by the traditional and conventional insurance in terms of excluded perils, deductibles, scarce capacity, or pure financial risks where the insured has no control over the underlying asset, typically contingent business interruption. These innovative solutions allow the insurance brokers and risk managers to restructure their insurance programs and take better control of their risks. These innovative solutions are certainly not to replace, or they are not a substitute to the traditional insurance, but they very beautifully supplement and complement the traditional insurance programs. I would certainly not be wrong if I were to say that parametric insurance has the potential to achieve things that are not possible to achieve with traditional insurance, which relies on indemnifying on the actual loss sustained basis. On this note, let me welcome Tanvi Mehta of Swiss Re Corporate Solutions to enlighten us all on the parametric insurance. Over to you, Tanvi.
Thank you so much, sir. I'll just start by sharing my screen. Good evening and good afternoon, everyone. Thank you, sir, for laying the ground for introducing parametric solutions very smoothly. I'll just take a few minutes to do the basics of parametric insurance with you this evening. So we all know traditional insurance is indemnity based. You have a physical loss, there's a loss adjustment at the side involved, and subsequently claims are paid. Parametric insurance, on the other hand, depends entirely on the probability of a pre-agreed unfortunate event happening. It relies on the measurement of a triggering event or index, and it's completely independent of the underlying asset. The payout is quick and formulaic if the defined parameters are met. And because parametric insurance is solely dependent on the choice of trigger or index, it is important that we choose a trigger which is objective. That is, we usually use a third-party independent and verifiable data, which is reliable in terms of its consistency and timely measurement, and it's historically available as well. Since there is no on-site loss adjustment involved, the payout is generally a proxy for the economic loss sustained. Usually, there will be a difference, either positive or negative, between the actual loss sustained and the payout of the parametric cover. This sort of a risk is inherent in any parametric product, and it's called the basis risk. Now, parametric insurance's most important feature is its transparency in terms of payout and its simplicity of structure. Since it is independent of the underlying asset in terms of the risk quality and the vulnerability of the asset, it only depends on the trigger event. Hence, once parametric insurance is bought, it results in a quick and transparent claims payment. Let's take an example. A company is undercover for tropical cyclone by traditional cover and so has bought a parametric insurance to complement. When typhoon of a certain category passes the defined area of cover, the event is reported by the reporting agency, let's say in a few days' time. This info is usually publicly available, easily accessible to both the insured and the insurer. Let's say the trigger event exceeds the pre-agreed threshold of payout. Once this is established, then the payout of the pre-agreed amount is made within 30 business days from the event being reported by the agency. No at-the-site loss adjustment is required. The best part is that the proceeds from this payment can be used entirely at the discretion of the insured, whether it be for physical damage repair that they have suffered or to recoup some of the economic losses as a balance sheet protection measure. In practice, we are able to develop a parametric insurance product for any event that can be modeled or it's fortuitous. More applications of parametric insurance are seen in the cases of natural catastrophes like a tropical cyclone, earthquake, and flood or drought. Weather-related events like too much or too low precipitation, wind or solar hedge for power plants, etc., are also relatively easy to model. Any other non-weather event which can be modeled and it's fortuitous can also be used to develop a non-damage business interruption parametric product. Example for that would be an insolvency of a key supplier that you're dependent on. So now that we know the basics of parametric insurance, I want to dwell into when and why should we be looking into buying parametric insurance. Parametric insurance finds most of its uses when a traditional insurance is not enough or is not available. So some of the examples of such situation could be in case of uninsurable peril or asset classes. For example, transmission and distribution lines, because these are not usually covered by our traditional policy. Pure economic loss without physical damage, that is loss of attraction or non-damage business interruption cases. When there is scarce capacity in the traditional market available, for example, Japan earthquake in Japan. Or another scenario is when fast payout is crucial for liquidity enhancement, that is in case of emergency relief actions or quick resumptions of operations, especially in the case of utilities. So in general, parametric insurance can be used as a tool, as a risk management tool to reduce revenue volatility and it's always used to complement traditional insurance rather than replacing it. Now, let's look at a real-life example where parametric insurance has been invaluable in terms of providing fast liquidity. So our client was a utility company seeking insurance for transmission and distribution lines in the Philippines, which are standard exclusions in most traditional insurance policies. They were looking to cover these lines in order to allow for speedy restoration of power grid and resumption of essential services after a tropical cyclone hits. We provided a classic catastrophe in a circle cover for tropical cyclone. Indemnification areas defined by circles on the left map were designed to cover regions with critical asset concentrations for the client. Payout table, as can be seen on the bottom left corner, was designed on the basis of historical losses analysis with respect to typhoon events for these particular assets. Now, how does parametric insurance work? If the tropical cyclone path passes through the circle of cover with a defined wind intensity as per the payout table, you get a payout. It's simple and straightforward. And the beauty of parametric solution really came out when a payout was triggered in December 2021. Tropical cyclone category 4 audit made landfall on 16th of December 2021, and its path was crossing one of the circle of cover closer to Cebu. Define agency, which in this case was Japan Meteorological Agency, reported final data on 6th of January 2022, and payout was made to the client in their bank accounts on 18th of Jan 2022, 12 days after the event data was reported. The client was extremely impressed with the ease of claim payment process. They just had to send us an email saying they've suffered this particular event, and they were very complimentary of having bought this policy in the first place. Whilst other companies were still struggling to understand the extent of damage and hence the loss to their assets, this client already had got their payment and could focus their energy to get their grid back up and running in almost no time after that event happened. Now, one question that always comes up is, what about renewal terms? Does the parametric insurance premium go up once I have a claim? As I previously mentioned, parametric insurance is only dependent on the probability of an event happening. As such, we keep into account only two factors that affect the premium, and those two are probability of an event happening, which we take into account with our models, as well as the second one is the capacity available for that player. Climate change is certainly making us look at our models critically. But for example, in this particular scenario, we had a flat rate renewal right after paying out an insurance claim. To summarize, parametric insurance is a great way to complement traditional insurance policy and acts as a risk management tool to get additional cover on natural risks. With that, I will hand over to Mruna to lead us into the panel discussion.
Hello, good afternoon, good evening to you all. Thank you for joining this event, which is on a Friday evening. So the topic today, it is on parametric insurance, and it starts with narrowing the gap, which clearly means that there is a gap in the insurance policies, that is the traditional products that we have, and what a parametric solution is going to provide by bridging it. So let's try to understand through this panel discussions in better detail how it can help businesses evolve in terms of managing their risk better. The presentation given by Mr. Ajit and Tanvi deep dived into the various aspects in terms of understanding the gaps which are there in the market and how parametric can provide a solution which will complement or blend with the traditional products. So my question to you, Mr. Ajit, is how have you seen the adoption of parametric risk solutions evolve in the corporate sector, especially the Indian corporate sector, in the last 3 to 5 years? Are you seeing the change in the dynamics or in the risk management thought processes of the insurance and risk managers here in India?
Thank you, Brunal. So, we've seen that while initially, quite a few years back, the crop insurance was being done only by the government or through the government. Of late, we are seeing quite a few corporates getting into parametric insurance for crops because they need something. Also, we are seeing good interest from the renewable energy sector, particularly the wind farms and the solar farms, where they are looking at covers with respect to loss of wind or the wind patterns changing or the loss of radiation. There have been a more interest on event insurance. So a lot of corporates looking at events insurance, which are also coming to parametric. But the most interesting was the cover taken by the Nagaland government. We saw that the Nagaland government has taken a parametric insurance for the precipitation in their state. This is something, where they are trying to take care of the limitations which they have from the state disaster relief funds and the national disaster relief funds. And I believe that with one state going in for this, it's quite possible that many other states in the Northeast India, as well as quite a few states in the eastern part, where you have much of cyclones and storms coming in, they will get into this. I have a feeling that the way the things are going, more and more corporates will try to analyze their needs and see which are the indices or parameters with which they can correlate their exposures. And if they are able to do this, we may find the reinsurers and the insurers responding very well to this. That's from me, Ronald.
Yeah, great, Mr. Ajit. So what I understand was initially, which was probably a push in terms of people buying only a crop insurance, to where we see today governments looking at parametric as one of the solutions, is a good headway to event which are getting insured through parametric. I would, from the events perspective, I remember very categorically the incident on the Wimbledon match, which got cancelled in 2020 due to the pandemic cover. And this was one of the insurances in terms of when they got a payout because they had covered pandemic. So this is more related to physical damage, business interruption loss, which they got coverage for when the events were cancelled during Wimbledon. So I think from insurance perspective, a lot of new innovative solutions are coming up in the days to come. So coming back to you, Tanvi, how have you seen the evolution of the market in the last 3 to 5 years, and which are the industries you are seeing are getting benefited through parametric risk solutions?
Thank you. So just to answer your first question, from an insurer's perspective, I think parametric insurance is definitely becoming more commonplace in the last few years. We see more clients wanting to know more about it, more brokers putting in place dedicated teams to sell it, as well as more insurers providing parametric insurance solutions. So as such, parametric insurance is definitely seen now as a very useful tool for risk management purposes within corporates. And coming to your next question in terms of what sort of industries can benefit from parametric solutions, I think, as I mentioned during my presentation, from an insurance perspective, parametric insurance can be used for any industry where there is a need to complement traditional insurance. And to take an example, we have given parametric insurance for transmission distribution lines, which I talked about, for the Nagaland state rainfall, as Ajit sir talked about, but also for a construction project, which was a 5-year-long project in a very neighboring country for a hydropower project plant in Nepal. So the applications are really varied. It's just a matter of finding the right limit, the right index, the right structure, the right payout.
Thank you, Tanvi. Uh, so I had heard about parametric risk first time in early 2019 when I had attended a seminar as a part of alternate risk transfer. And in the last couple of years, it has gone a long way. So, from your industry, which is into renewables, Mr. Murthy, how relevant is parametric risk solution for your business? Have you seen any claims in the past couple of years which you felt if it was a traditional insurance policy could not have been paid so quickly in terms of the turnaround time and in terms of the coverage perspective? So if you could throw some light from your specific industry and how it has benefited you, it would help the audience.
Thank you, Mrinal, and thank you, Parima, for bringing me on the panel. With respect to the renewable industry, the focus has always been on the traditional insurance parts, until the last 2 to 3 years perspective. The parametric, though it was thought over in theoretical terms, and none of the industries has actually came forward to bring about the coverage. But the years 2021 and 21-22 has actually reflected a significant downturn in terms of the wind pattern. That has pushed several industries, who are in the renewables to look into alternative solutions for de-risking them. Parametric is the one perspective, that gives enormous advantages in terms of securing a predictable revenue and profitable portfolio for an entity. Renewable industry, as all of us are aware, is a 25-year asset. So the predictability in terms of the top line and the technological risk being addressed completely. Any weather-related patterns, if they are kept open, there are lots of questions that will be raised by investors, by lenders, by credit rating agencies, wherein they continuously evaluate whether the investment is right or wrong. So when I presented the prospect of a parametric insurance coverage that assures a specific revenue generation with respect to a particular power plant, I was surprised to see that it has evoked enormous positive response from investors and also credit rating agencies. Lenders have not yet fully understood the importance of parametric insurance coverage as yet, but the industry started really seeing the benefit of the parametric coverage. The cost certainly tends to be a bit higher, but it is not like a typical insurance coverage that needs to be seen from a cost side only. It is a complete de-risking strategy that comes into the place that far overruns the cost that is actually identified with the parametric coverage. One simple perspective, what I could understand from the industry is the insurance claim settlement has always been a bone of contention, is the biggest threat for any company which is actually taking the regular insurance coverage. The parametric offers such a beautiful concept wherein with a pre-agreed parameters, the claim is automatically triggered and the disbursement also happened within a very short span of time, unthinkable for the traditional insurance. One perspective, what I would like to say here is, since this is a very nascent in the industry, that is taking up the parametric insurance coverage, we have not seen any claims so far from the renewable industry so far. So once the claims start coming in and people start getting the result of it, more megawatt coverage will come in and the acceptability will come across the board. One of the most important factors that needs to be understood is it is a win-win for everybody, whether it is a promoter, whether it is a lenders, whether it is credit rating agencies, or even the investors. This is a win-win situation to have a coverage for parametric. One another aspect I would like to say is the coverage of parametric has to be for a period longer than the traditional insurance, say a 3 to 5 year perspective. Still, the model has not been frozen such a way that we have a long-term visibility in terms of the insurance coverage and parameter. The another important, very critical and important aspect that needs to be mentioned in parametric is Unlike the traditional insurance, I can decide what is the quantum of coverage I need to have in terms of my top line. I can decide what is the conversion rate for a wind pattern to the power generation, and what is the minimum revenue that I need to have in my plant, and go to the insurer asking for an insurance coverage. This is completely unheard of. It is only a matter of time the industry comes to know of it. The kind of sessions what we are having now are an eye opener for the industry. More numbers will come in, the cost also will come down. I believe the parametric insurance coverage, like what Mr. Ajit and Tanvi mentioned, it's an absolutely complementary to the traditional insurance. It's a way forward for the entire entities to take it up. The lenders also will come forward and start insisting on this parametric insurance coverage in a short span of time. Is my take, Mona. Thank you, Mona.
Thank you. Thank you. This was certainly very insightful. So on the same topic related to renewable, I have a question from the panel wherein from the audience which says, how can it be implemented in power genco where the transmission or the TD lines are not available in the assets? So over to you, Mr. Ajit, if you can throw some light on this.
So if see the power evacuation infrastructure covers are available both under the insurance as well as under the parametric insurance, as Tanvi discussed during her presentation itself. So if you are concerned, or if you have only the transmission lines as your asset, then probably you will have to go to parametric insurance, because the traditional insurers do not have this in their treaty. It's a part of the exclusion of the treaties. But if the power evacuation infrastructure or the transmission lines are along with the production assets, then there are good ways of covering them in the traditional insurance itself, and whatever balance is left, you could look at covering under the parametric insurance.
Great, great. Tanvi, I belong to an FMCG sector, and since FMCG sector is all about commodity pricing, which sees a lot of fluctuation because of climate change, weather parameters, which eventually also leads to increase in the pests and leads to decrease in the overall yield of my products or the commodity. Now, is there a way to get such kind of covers wherein the business comes back to me and says that the pest infestation happens because of increase in the rainfall or the sunlight or whatever, which eventually leads to these pests coming and destroying the crop. So, is there a way out through parametric risk solutions that we can hedge such kind of risks?
Definitely. So the one way to look about parametric insurance is to take into account what is your risk and what sort of index can it be correlated to, right? So, for example, when you talk about yield going down, what we are essentially going to cover is what is the underlying reason why the yield is going down. And here you say, for example, because of low rainfall. There definitely we can cover low rainfall product, parametric product, to cover the yield of that particular crop. How closely will it be correlated and how much will it affect is the one thing that takes into account the basis risk, and that's where the structuring of a parametric insurance solution really comes into effect. So what we take into account, just one thing, just what we take into account is historical losses or historical information and historical data that is available in terms of rainfall and yields in order to structure these sort of.
So at that point, we can always correlate it and show that because of this historical data and change in the weather pattern or rainfall, whatever, has led to infestation of more pests, and that has led to damage. Is what if you're able to demonstrate, we'll be able to find a solution through parametric, right?
Definitely.
Is my understanding right?
Definitely.
Again, one question that comes to my mind, Mr. Ajit, is that businesses always come back that saying that parametric solution is good, but it's always expensive. So how do we strike a balance between the costs and the benefits? So what is a happy medium when we are looking to balance the strike rate and the payout to optimize the premiums? This is a question which I get constantly bugged with from my business team. So I'm just throwing the ball to you.
So, Brunal, this is something which we hear from everyone. I think it's unfair to compare the premium rates of traditional insurance with the premium rates of parametric insurance. They're two different products, completely different ways of looking at it, completely different ways of payout. So, I mean, in the traditional insurance, you pay premiums on the entire replacement value of the property, and you will hardly have cases where you'll have total loss. So the losses may be just part. Whereas in the parametric, you don't insure your entire replacement value. You look at your risk exposure, you correlate it with the predefined parameters which you are agreeing with the insurers, and the insurer agrees that they will be making you a full payout, full risk exposure payout if that parameter exceeds or is met. So, I mean, it's absolutely, I mean, there is no comparison between these rates. The other thing is, it's important for everyone to realize that in the world of insurance, you are supposed to be paying for your own losses in the long run. The insurance provides you stability. So if you are understanding this, and if you are able to correlate your predefined parameters with the risk exposures, there are many good reinsurers like Swiss Re and others who can design really good products at affordable, good prices, wherein you'll find that you'll be able to create stability. That's meant from me.
Sure. So what essentially you pointed out was that insurance is a risk transfer mechanism. So since it is my own business, there is something called as a business risk. So as a part of having some skin in the game, I need to decide what is the risk that I can retain and what is it I can transfer through parametric. Second point is when you're talking about a traditional product wherein we are covering all the assets. So it is not selection. While in case of parametric, we are selecting the parameters, we are selecting the strike rate. So the probability of that event happening could be much higher compared to a traditional insurance, wherein the loss ratios could not be that high because at any given point in time, it's not that your all assets are going to get damaged. Is my understanding right?
So Mridal, in the traditional insurance, you are actually insuring an asset.
Yeah.
Parametric insurance, you are ensuring the probability of a predefined event happening and causing loss. So the two different things, as I said, there's no correlation. It's a very different way of looking at it.
Okay, so though we are talking about a risk, but the way of looking at the risk in principle is very different. So businesses should not compare one product with the other product.
Yes.
Right? So
Absolutely.
with that, I would go to Mr. Murthy. In terms of the business that you are in, which is very capex intensive, having a long gestation period, how are you able to manage that? Because you would also have a project insurance, which would be a traditional product, with that blending parametric and bringing it into the fold. And as you also mentioned, it is all about de-risking of the business. That is what you look for when you look at parametric as a solution. So how easy or difficult it is to sell to your company or the market in terms of having parametric as an additional cover, and does it help you in terms of leveraging better rate when you are talking to your lenders? I mean, do you get 0.5% lower rate when you are negotiating in the market? So would want to
This is,
understand the business perspective as well.
yeah, Mrinal, it's a wonderful question. This is absolutely relevant. I would actually substantiate. Even if we say de-risking is a must for the businesses, unless it has a financial sense, no industry will come forward and then put its investment. From the renewable perspective, what I could really see by my own experience in the previous independent power producers, the very clear perspective is in a 25-year perspective, an investor runs through a financial model and always takes a variability of between 1 to 2% in terms of the top line, considering the weather factors. If I am able to de-risk myself through a parametric insurance coverage, my cost when I worked out in that model is anywhere between 0.2% to 0.3% of my total revenue. Now, if I can put a number, a stark number, if I have to put it, on a per megawatt basis, somewhere around 50,000 rupees is what I'm incurring per megawatt basis as an insurance coverage right now on an annual basis. If I start taking more megawatts, the cost will come down. But even at the current level of the parametric insurance cost, what it makes sense for me is I'm able to avoid a reduction in the revenue by my investors anywhere between 1 to 2% by spending upfront about 0.2% to 0.3% of my revenue. So it makes a financial sense for an investor. This is what actually is picked up by all the rating agencies and also the investors. We are able to see the immediate benefit of adopting the parametric insurance coverage, not as a fad telling that new insurance coverage has come. I want to be in the industry. I wanted to take this cover. Absolutely, it is not a fad. It makes a pure financial sense, to actually get ourselves covered. Another biggest advantage for renewable industry is we have a proper index to decide and identify what is relevant to my power production. How much of weather wind pattern is actually translatable into the power generation. I can really demonstrate and make the insurer also agree on the formula. This is the most important aspect in the parametric insurance coverage, as all of us are aware. Having an index which as a business I understand perfectly and the insurance also agrees, then I can set a benchmark of parametric coverage based on that parameter. In the wind perspective, I have a NASA MERA data which is available publicly and identified and agreed by everybody around. I can model the parameters based on the NASA MERA data and assume that this cost is going to be incurred for a 25-year cycle and get the benefit of the positive reaction from the investors. So like what Mr. Ajit mentioned, it is not cost versus benefit. It is a compulsory requirement in terms of getting more value for my business and also ensuring that I have no surprises in the renewable industry for purpose of making the loan repayment when the weather pattern is typically lower. I have no concern in terms of making the default. So this actually makes a financial sense, Mona.
So this actually would help a lot of risk and insurance managers in the industry, because ultimately when you go to finance, they would always ask whether it makes any business or a finance sense. So as Mr. Murthy clearly mentioned, yes, there is a lot of merit in taking this policy, just not because it's a new product, but if it is actually making business sense to your business and it is able to create that value of hedging those parametric risks which otherwise don't get covered in the normal traditional policies. Mr. Ajit, now that we have spoken on the business aspect, do we see any regulatory hurdles in terms of having this product designed and marketed in the Indian market, or some capacity challenges which create issues for companies like us who want to buy such products?
So, Brunel, I don't think there are any regulatory challenges in this. There is no prohibition by the regulator or no particular regulation which prohibits any insurance company from issuing the parametric insurance products to the customers who want it. On the contrary, even if a client is looking at multi-year parametric covers, there is still no prohibition, or there is no obstacle from the regulator's side. So it's all about clients themselves understanding their risk, understanding the predefined parameters, correlating them with their risk exposures, and then getting into a discussion with the parametric insurers and find a solution and get them issued. So as far as the regulators are concerned, absolute no challenges, no restrictions.
So there is a green signal from the regulators and it makes good business and financial sense in terms of having such products. And we have people like Tanvi who will be able to structure and design the products basis the risk modeling and the various strike rates, payouts, whatever are the parameters that the businesses want. So over to you, Tanvi, in terms of understanding how has the technology played an important role, like AI, big data, etc., in terms of structuring the future of parametric risk solutions?
Thanks, Mrinal. So we just want to give one example. So when we first started doing parametric insurance, we started with the first generation product, which was basically catastrophe near circle, which is what I talked about earlier in my presentation. So what would you essentially do is look at the magnitude of an earthquake at the epicenter. Now, in our second generation, we are able to look at the shaking intensity of the location of the asset. So this definitely reduces the basis risk involved within a parametric insurance policy. And it has only been made possible because of satellite-based imagery and sensor data, which is quite actively recorded and also very widely available across the world. So as I can see, as more and more data gets captured across the world using newer technology, we can definitely look at a more enhanced product offering with perhaps reducing the basis as much as possible in our new parametric insurance products going forward.
Sure. So, looking ahead, what do you envision as the key growth opportunities and the challenges for parametric risk solutions in India over the next 3 to 5 years?
Right. So one of the things that I want to mention here in terms of real challenges is that you don't want to have a bad app. So as we previously talked about, a lot of markets, a lot of brokers, a lot of clients buying more and more parametric insurance policy. I urge everyone to look at their policy wording when they're buying a parametric insurance policy. You want to make sure that when you buy a parametric policy, the terms of coverage cover all kinds of financial losses, not just physical damage. And it can be used for any purposes in terms of the payout and not just for defined measures only. And one of the growth opportunities that I definitely see in the market is the ability to combine perils and come up with a dual trigger and more sophisticated, more complicated parametric structures going forward. This will also reduce the premium, but also help as a risk management tool with a more enhanced, nuanced offering that the client definitely needs.
Sure. So that's really great insight in terms of the policy wordings and dual triggers, which probably in the years to come we are going to see how this product evolves. Mr. Ajit, you had spoken in your slide about a huge gap between economic losses and insured losses. So, from a risk management perspective, do we have some modeling tools available wherein I can, predict, have a heat map in terms of the next 3 to 5 years, how the landscape for climate change and NatCat perils are going to operate in my regions wherever I have a business exposure. And as a business, I'm very much better prepared and ready to address such risk. So I can include it in my overall risk management framework.
So, Mrinal, there are companies who are working on this using the past data of these parameters and trying to model them for future, taking assistance of the technology tools and the AI tools and the changes in the weather patterns, etc., the climate changes which are happening over a period of time. While the prediction is pretty good, these are some things which can be used, but as I said, you can't forecast or you can't predict the future. So there are models which are giving you a good hint And certainly these can be used to look at what are your predefined parameters. And these tools will certainly help you in making a far better correlation with the risk exposures. But one thing which needs to be very clear, and I would want to call it out, is that the parametric insurance, the biggest challenge and biggest risk is the basis risk. And it's almost impossible to eliminate this risk. So while the AI tools and technology can assist us in minimizing this basis risk, it will not eliminate it. But yes, with the way the risk landscape is changing, with the way these stakes are increasing, it would be important for all corporates to look at their risks, to look at how they can create correlation between their predefined indices or parameters with the risk exposures, and look at creating alternate solutions from the parametric insurance side so that they can reduce the overall gap in insurance. That's Bedford.
Sure, excellent. So one question I'll take from the audience, it is about how does the regulator look at this from a policy, structure and offshore reinsurance session perspective? So Mr. Ajit, would you like to take this question?
As I said, the entire parametric insurance, whatever is happening in the country, is all supported by the reinsurers on a facultative basis. And whatever policies have got issued in India, we have not seen any challenges from the regulator with respect to the facultative insurance being provided to the insurance companies who are registered in India, and they in turn issuing the policies as per the regulations in India. So to my mind, if you are doing it right, there are ways of doing things absolutely right without any challenges, that you get support facultatively from the reinsurers and issue the policies as per your regulations in the country. I don't see there any challenges.
Sure. So just final word from you, Mr. Murthy, on the parametric risk solutions and how you have benefited from it. I mean, from my perspective, I have certainly benefited as a client because we had taken it for a few of our plantations. And one of the triggers being the sunlight and rainfall. And for that, we needed rainfall in a specific day of the year, wherein when the season happens for blooming of the berries and all. And when the rainfall did not trigger, that's when the parametric risk solution parameter triggered. And within 30 or 45 days, the claim was paid. So we didn't have to go to the insurance company with a plethora of documents. So because the climate data was very much evident and the insurance company paid the claim. So it was quite seamless for me. So if you want to cite some example from your end as well.
No, actually, this is another good question, Mrinal. From an industry perspective, it has been a hard sell in terms of introducing parametric insurance coverage for renewable industry. But once it has been done, the lenders, investors, credit rating agency, and promoters have taken it so positively that we are able to see the immediate benefit in terms of the valuation of the entity as a whole. After de-risking. So this has far outsurpassed the costs that are associated with taking this parametric insurance coverage. But what really still pending to be seen is how the claim mechanism is going to be handled by the insurers and the reinsurer. That is going to be a very significant factor that will decide how fast the parametric insurance coverage will be adopted by the renewable industry. So the critical factor is not the cost, but the way in which the settlement mechanism is going to be coming on board. That will help so many megawatt and so many industries in renewable industry are coming to take this parametric insurance coverage. Automatically brings down the cost per the megawatt of asset that is on portfolio. But the biggest factor is I'm only looking for a scenario wherein a 3 to 5 year coverage for a parametric insurance, resulting in a positive claim, a quicker settlement. When these things happen, it will be a wonderful fillip. All the lenders also will open up, and we'll start putting this as one of the conditions in the disbursement for a 25-year-long project like renewables. That parametric insurance coverage has to be a must for business. No, I'm only looking forward for that kind of a situation wherein it's a win-win for everybody. Thank you,
Great.
Mona.
Thank you. Thank you for insights from Mr. Murthy, Mr. Ajit, and Tanvi, wherein we touched upon the aspect of what is the difference between a traditional insurance and parametric and how we can really bridge that gap. Apart from that, how we need to set the parameters and how they can benefit the business. At the same time, it is very important to go through the policy wordings because they are going to be key factors, is what Tanvi said. And from the industry, Mr. Murthy brought in a lot of valid points in terms of how the industry, especially renewable, is evolving in terms of parametric. It makes a lot of business sense. It is also de-risking of the aspects related to financials. So it is also important that probably he feels that the regulation should also be in place in terms of just not being a pull, but also lenders, credit rating agencies pushing parametric as a solution wherein there'll be more takers for such kind of products. And as we have more takers for such kind of products, obviously because of economies of scale, there'd be much more better ratings, and usage of technology, AI, etc., would also help in better risk modeling as per Tanvi, wherein you would have multiple triggers in the days to come. So parametric insurance solution as the last point from my end, I feel it's just a starting point. We have just scratched the surface, I can say, and there's a long way to go. So thank you all for joining today's session. Over to you, Sam, now.
Thank you, Murnal. Wow, such an insightful discussion, and I'm sure there's so many questions that we may not have been able to answer, but I think like what Murnal said, this is just the beginning for all of us to understand parametric solutions a little bit more, and hopefully with time to come, we'll be able to delve a little bit deeper into that. But fret not, that was what I would like to say, because we do have some parametric solution topics coming up, but that will only be featured in our upcoming Parima conferences. So before that, Fareen's going to pull up a short poll. Please let us know how we've done. Give us your feedback. Let us know, if you'd like to see something more like this. Apologies. Let us, and then we can always look to improve. So these are the two upcoming conferences that we have that I would like to share with all of you here today. So in the upcoming Manila conference, there is a session on parametric solutions, and to no surprise, there will be something in Mumbai as well. Also like to share that Swiss Re Corporate Solutions will be our silver partner in the Manila conference, while Prudent Brokers will be our gold partner in the upcoming Mumbai conference. If you like what you've seen today, you will also be seeing Jan, who's one of Parima's board members in Manila, and Murnal, who's also going to be at the Mumbai conference, moderating some sessions there. So yes, scan the QR code, look to register, see what the agenda looks like. If it's something that interests you, feel free to register for the conference. We look forward to welcoming all of Parima members, corporate risk managers to attend the conference for Parima, as Parima is looking to host conferences for risk managers, and this is by risk managers. I think that's all I have today. We are a couple of minutes beyond 7:30 Singapore time, but I think that is 5 p.m. India time. So I'd like to thank all of you for joining us today. I'd like to thank Mr. Ajit, Mr. Murthy, as well as Tanvi for giving us your insightful discussion, insightful knowledge on parametric solutions. As you can see, so much more to dig in deeper if only we have enough time. Thank you, Myrna, for moderating the session and picking up the questions from our very engaging audience. And with that, I'd like to thank everyone for your time again today. And we look forward to welcoming all of you at our next Dynamic Huddles, Parima Conference, or anywhere that Parima hosts with our partners across Asia. Thank you all for your time, and we hope to see all of you again.